okay, you know what? Let me look at your debt fund because I've got 3 to 4 multifamily assets. They're fine. I'm happy. I understand where that's going. I need to diversify. I want something else. Or let me look at oil and gas, or let me look at self-storage or whatever else you got underneath this umbrella. And as long as you scale smart and bring the other sides of the business, acquisitions and operations alongside it, and commit to A plus acquisitions and operations sides of the business and running it the way that you've run your multifamily operations, talking to all your listeners here, you can certainly do that. I don't think we're at the bottom yet. I think that we've begun the correction where the overpricing of the market, it just isn't, it's just not big. It just hasn't fully baked in yet. Real estate always tends to respond slower than other industries do. By the way, that deal that I just told you about, the deal with the guy selling it for less than what he paid for it, we passed. How about that? Even with everything, we passed because of insurance, because it was still hard for us to make it work. That was a big insurance bump. And my partner looked at it and said, hey man, low-lying coastal, like maybe what if the insurance goes to 1,500 or 1,600 or keeps going? I mean, at what point do we just say, uncle, again, it can't go to like 10,000 a door, right? It can't go up forever and ever and ever, because then the whole region should just become, okay, I guess America can't occupy the
Never,
low-lying coastal parts of the country anymore.
never say never. I mean,
That's
there's
true.
big insurance companies started pulling out of California and Florida where you can't even get insurance anymore.
Yeah. 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 So I talked to our insurance guy. I think you and I use the same carrier, but just for to be friendly, we don't have to name them, but I think that we use the same carrier. But I talked to one of the guys over there and I said, what's the end game here? Like if we're going to 12, 13, 14, 1,500 a door for a lot of these properties, it's like, where does this going to go? And he says, well, what's going to happen is these rates have gone up so much that it's going to allow for new players to come into the market. And he said, like big fish like Grace, Greystar, the property management company, right? The largest PM company in the country, I think, right? Now, if Greystar manages your real estate for you, they will insure it for you too, right? Think about that. PM companies are starting to get into the insurance business. So I think that we're going to see more players. Like what if Fannie Mae is a bad example, right? But what if a insurance company that was the lender on the deal, right? Because insurance companies will lend, for a place to place their capital. What if they say, hey, listen, I'll knock your rate down by a quarter point if you let me insure it too, right? I think we're going to see more players come into the multifamily insurance space, and that's what's going to make it more competitive, which is what we need, to get more competitive.
Another product would be super interesting is a cap on insurance rates. Like, I mean, that's the biggest thing. You would probably underwrite 1,200 and the deal would work, but kind of like these interest rate caps, no one had any idea it would basically 10x, 50x. Like if there was some kind of insurance for the insurance.
Yeah, I was going to say that you're talking about insurance for insurance. Yeah,
like,
but if you approach me with that, a like doomsday scenario insurance prices, okay, I will insure you that your rate will not go up anymore. Your premium won't increase by any more than 6%. I would bake that premium into my underwriting. Like, what would it cost?
exactly.
Because then I can fix expenses. You're right. I can, and the concern is not what it cost me the day of closing. The concern is it going to go up by another 40% next year? Because how do I underwrite to that? It's like crystal ball here, so that's what I agree. I think that's probably what we're going to see coming. I think the insurance world in multifamily is going to change because it's going to start there's definitely a problem, and problems in a lot of ways create opportunities. Probably not going to be me that's going to create it. And we've even talked about getting a bunch of, I'll tell you one thing that you and I've talked about is getting a bunch of owners together to say, hey, I'm owner A, this is owner B, and then owner D through H. We're all going to put our portfolios together and just use it for a leverage bargaining agreement, or do captive insurance, or do something creative. I mean, just so we could use our strength in numbers. Let's do something together.
I think it's just times like this where we as entrepreneurs have to become creative in general, right?
Yes.
In general. And I'm going to talk about kind of scaling our business a little bit. I would say probably after 2010, it was relatively easy to scale because, well, that's not entirely true because it's always hard to get a deal done.
Hey man, this business has always been hard, brother.
it's all
I don't remember this thing ever being easy. I remember in hindsight, it was like, man, I sure wish those days were back again. But
You're
yeah.
right about that. Let me rephrase what I'm about to say. Is if I observe companies, especially when they start out multifamily or some other asset class, in order to preserve, in order to scale in a meaningful way, and let's say you and I will do 4 deals a year, 2 to 4,
Yeah.
which is great.
Mhm.
When you got 100 million, 200 million in assets, right? But if let's say you have $1 billion in assets, you doing another 2 to 4 deals a year isn't really going to ensure that you grow at the scale you might want to grow, right? And so
Mhm.
you either obviously do more deals or you do something else. And it's very interesting to see how companies what they do to try to scale. And I just want to get your perspective on that because I'm sure you've grappled with this. And
Mhm.
obviously, when you're dealing with market issues like we're dealing now, it takes a lot of attention away. It's not like I can take all of my energy and now pour it into growing my company. No, I have to take a significant amount of energy to actually operate well,
Yeah.
and so I can't. I mean, I can't really do both. I am trying to grow, but a lot of my energy is being consumed on the operational side, which, of course, at the end of it, the operation will be better because of it. I get that. It's still
Yeah.
irritating for me because I'm a growth guy, not to be able to take my entire energy and just kind of move forward with that. And how are you solving that? And if you're not solving it now, which I won't fault you for the reasons I just said,
Mhm.
your mind, if you had a magic wand and you could solve all the things that are sucking up your time and energy right now, what is your vision for scaling your company?
Well, I mean, first of all, just like you, I got great people. That you and I are just the pretty faces of our companies, but we're not the only operators of our companies, right? Like there is a team behind me and two partners, almost exactly like you. I got two very strong partners behind me, just like you have two very strong partners just behind you that are doing a lot of the help scaling too. That's number one. Number two, the mistake I want to scale too. I want to grow as well. I ain't done yet, kind of thing, right? But I think that you got to scale smart and you can't force a square peg into a round hole. So I think that there's two mistakes that one could make in scaling now. And you and I will not make either one of them because we're just, aware enough to not do this. Mistake number one that you can make is by scaling, I think, in like only one section of your business. So let's say I decide to go super like hardcore on raising capital and I'm going to create the machine to lever like $50 million in equity a year to my company, but I don't do anything on the acquisitions and on the ops side. What that's going to do is it's going to create a lot of money coming in, and I'm going to have to force a square peg into a round hole on a deal and overpay on a deal and allow myself to get pulled into best and final, best and final, final, best and final, 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 and then pay like 10% more than the guy behind me in line, right? Because I didn't scale my acquisitions game. Secondly, I then have to take all that equity I just raised for the deal I overpaid for and put it into a mediocre operations business that I didn't invest in, that I didn't scale, that I didn't put the right people in. And I know you guys just hired an asset manager, which, we did too recently, right? So we're making the right investments there. So that's a case in point of what the right things to do in scaling. So the short answer is the right way to scale is to scale all facets of a company: equity, operations, and acquisitions, right? And that's what we've been working on doing now. Everything from like considering different management strategies, including managing maybe on our own in some markets or something like that, for property management, or just different ways to get equity, different ways to acquire deals, maybe starting to talk to banks for deal, maybe not just talking to brokers to acquire properties. Scaling acquisitions could look like looking in other markets and also looking at other resources. So that's how we're trying to scale. Certainly not like, let me scale by finding more deals. No, you got to scale by doing all the buckets of a multifamily operation.
I found that most syndicators who've done a handful of deals or even have, up to 1,000 units, that is their scaling plan. It's just, well, let's just do more deals. And to some degree,
Yeah.
it's not the same thing. We'll just go and do what we did last month. And we found that doesn't really work very well. And you're right. You have to really focus on building a business. I have like in my mind, Matt, I think I came to this while I was Deal Maker Live, and I was thinking about the levels. There's always another level, Matt. Always, right?
Mm-hmm.
You're like, oh, I'm at the top level. No, there's always another level above you.
There's always somebody ahead of you in line, right? There's always somebody bigger. Yeah.
Let me get you. So level one is you do deals. Okay, you're the
Yes.
deal maker. You do deals. You're happy. Blah blah blah. And then level number two is when you decide to build a company. Like you actually go, oh my gosh, I have a company. I actually have to build a company. Like I'm building a company. Like that's level two. But there's two other levels, Matt. Check it out. Level number three for me is building a company that runs without me. So I call it, I want to move myself in the owner's box, right? Whatever book you're reading, it's who, not how. It's, I want to clockwork the company. Okay.
Traction, all that stuff. Yeah.
So that's cool. Okay. But now I discovered a fourth level.
Tell me.
The fourth level is when you basically have different lines of business under an umbrella. Okay. So here's what I mean. So for Nighthawk, our investment company, right? So when an investor calls in, they want to invest with us, we have obviously existing cash flow and multifamily to invest in. And that's fantastic. It's probably the best investment class in the world. Okay. But there are other types of investments within real estate have different risk profiles. So what if, okay, and you and I have talked about this, what if we could offer a different kinds of asset class, for example, a debt fund? A debt fund has no appreciation whatsoever, but it's all cash on cash return, right?
Cash flow day one, though. Yeah.
And then maybe down the road, we create a ground up development fund, right? And there's no cash flow at all, and it's just all appreciation. And then you have your cash flow and multifamily in the middle. And I think, to me, in my mind, that is a vision for us to scale. And you and I have talked about this so that you can actually really serve your investors to some degree. Yes. Because the investor has a certain amount of money for a certain amount of risk profile. That's why they have different investments. And if they trust you in one way, they might trust you for something else as well. So to me, and also if I study these syndicators who have really grown to a large degree, that's what they've done as well. And it does go back to the who, not how. You really put someone in charge of that line of business. Hey, Sam, you're now in charge of, figuring out this debt fund. Go make this thing happen. We'll give you some equity, and you do. And so to me, that is a vision for syndicators in general. The thing they all have in common is raising capital.
Yes, they do. But first of all, like the term that I love about what you said is that it's almost like building an enterprise, right? That you've got not like a line of business, and any larger company doesn't sell just widgets or just car tires. They sell a bunch of different, not a bunch, but maybe 4 to 5 different things that serve the same client that you can leverage the infrastructure that you built already on, right? So like what you're doing right there is scaling the capital side of the business and realizing that an investor that walks in the door is not just, maybe they don't want to invest in multifamily today, maybe they're saturated and they either could go find some other thing to invest in, or if Nighthawk or DeRosa Group or whatever provides other things under their enterprise umbrella, then they go, oh, okay, you know what? Let me look at your debt fund because I've got 3 to 4 multifamily assets. They're fine. I'm happy. I understand where that's going. I need to diversify. I want something else. Or let me look at oil and gas, or let me look at self-storage, or whatever else you got underneath this umbrella. And as long as you scale smart and bring the other sides of the business, acquisitions and operations alongside it, and commit to A+ acquisitions and operations sides of the business and running it the way that you've run your multifamily operations, talking to all your listeners here, you can certainly do that. I don't recommend doing something like this until you've reached a certain scale in one thing, right? Because if you don't do that, then you're going to be viewed as kind of all over the place, chasing shiny nickels or whatever. But if you've achieved a certain level of success that you can point to in one lane of business, hey, listen, we've done it here, and now we're going to bring that mindset, that success, that brand, that's everything made that work. We're going to bring it down line into other asset classes we can offer to you, Mr. and Mrs. Investor, as well.